most well-prepared banks globally have been forced to deal with the impact coronavirus has had on their operations. As we move forward into a new period for the economy, Michelle Baxter, Financial Services Executives North America at Avanade, explains how they can become better prepared for the future. Hi, Michelle. Thanks for joining us today.
Hi, Kimberly. Thank you for having me. It's great to be here.
Coronavirus has had an unprecedented impact on the banking sector and exposed how many have been unprepared, from mass move to changes in operations and servicing their customers in new ways. What can be learned from this to avoid being unprepared in future?
Great question. Not unlike the major events that have impacted the industry that all of us can recall from 2001 and 2008, there has and will continue to be many lessons learned from this pandemic. What we saw was the major banks were able to get funds quickly to customers and small businesses, but it was a major challenge and it was slow. Fintechs, like PayPal and Cabbage, were able to be much more nimble. They didn't have the legacy processes and multiple interactions and physical signatures that the traditional banks have in their processes. At Avanade, we're looking to work with our banking clients to rethink the way they work. And we have a three-phased approach that we've been sharing: respond, reset, renew. I'll share a couple of comments on each of these areas. First area is respond. So the challenge here is to look at the massive surges in demand from their customers while coping with remote work, maintaining staff health and safety and security. So a couple of considerations: balance, encouraging digital collaboration tools, and looking for ways of industrializing the Band-Aids. The balance is all about, balancing human touch and automation, digitizing processes, and then the collaboration tools is really implementing programs like Teams, which we implemented at a record pace during the pandemic. Teams is a safe and secure way for your employees to do their best work and share documentation safely at home. The second area is reset. Look at digital not just with customer interactions, but end to end to drive down costs and protect profits. When banks reset, they're digitizing end to end, they're adopting cloud, they're thinking about AI to proactively identify customer and corporate risk. For example, they're using analytics to model credit card default projections, including roll rate forecasts, and better understand the credit risk position of the bank. And they're reinventing a local branch. When you reset how you think about the local branches, it's addressing everything from the expense of the property portfolio to providing local service in a way that's in a much needed capacity, either micro branches, robo branches. We're seeing a lot of continued acceleration of this type of thing. Finally, renew. How are banks going to get to growth? Accenture has identified that there's a potential 5% revenue uplift for banks who develop greater customer trust. Banks could offer better advice and financial management and help educate their customers into making better financial decisions. Increased personalization will improve cost, sell engagement, and customer sat, and most importantly, reduces churn. Finally, banks need to demonstrate greater purpose in their operations with a much stronger focus on sustainability, especially for millennials.
And what are the key areas that banks have been focused on?
So, Kimberly, we're seeing three key areas of focus that I'll mention today. The first, contact centers. The contact centers and demand management have to be automated. We have to have a better response. The volumes are just unprecedented. So contact centers have been a tremendous area of focus. The second one, homes. Obviously, we have employees that have never worked from home, right? We've never set up these employees to work from home. So this requires a complete rethink of security and several other considerations, not to mention the physical elements of your employees working from home. Approvals. Approvals are such a broad area for the banks, but both commercial and consumer, taking the friction out of approvals, taking time and cost out of approvals, digitizing approvals. That's a big area of focus. Now, the opportunity. Now that we've done the extreme in March and April to get business back on track, this is a really good time for banks to reassess how they can industrialize these areas, how they can institutionalize some of the practices that were mere Band-Aids, and become much more operationally resilient.
And what have some banks already started to do in order to build resilience for the future?
So Kim, we've seen some creative ideas. I'll give you three. One of them is with DBS. So they've been working with startups to help cafes enable them with takeaway menus and set up online ordering. They did this in 3 business days. So DBS won't charge fees for the first 6 months, and they've enabled their clients, their commercial clients, to immediately do this. Second idea is around social commerce. So we saw CaixaBank in Spain enable their retailers to sell over social networks with messaging applications. So CaixaBank launched social commerce, which lets retailers manage online purchases directly from their profiles on social media. And Caixa also launched PayGold, which lets firms receive payments online by email or text message without any need for a website. The third one I think is very interesting to bring up is PNC Bank. So they have released COVID vulnerability ratings, and they're working with the UK fintech Oak North to develop a COVID vulnerability rating framework for its business loan portfolios. So lenders undertake portfolio diagnostics to rate loans based on their vulnerability, based on liquidity, debt capacity, funding gap, and profitability. So a highly personalized proposition, and very useful, clearly. So fundamentally, where the banks were advanced in their ability to connect to ecosystems, if they had a model to do so, they were ready to serve their customers. If paired up, we've been helping DBS, for example, who was the first one I mentioned, set up an ecosystem model. So through open banking and their integration hub, they were ready to go. This open banking model is something we highly recommend. This will enable banks to fast track open API-led innovation of all kinds, to market test new value propositions, engage with innovative fintechs and partners, and have a marketplace model. So that was the first example I shared, DBS. So it really helped them to respond.
Okay, that's great. Thank you so much for speaking with us today, Michelle.